for simpler trading. Hope you guys are all having an excellent Monday. I'll give the stream a couple of seconds to get started. Let a few people shuffle in as they may, and then I will begin reviewing some charts with you. So thanks for stopping by. Like I said, I hope you had a good Monday. It was definitely a very active day of trading after the presidential election has now become more focused on actually having a winner. So the results of that saw a pretty impressive move, and I'm going to go through these charts in a way that is hopefully will be helpful if you're watching this as a recording, just kind of go through some concepts. And then if you have questions or there's anything you would like to elaborate on at the end of the session, I'll be happy to do that as well. So one of the first things that I am looking at today is the Dow, and you can see this several different ways. If you look at it through the continuous futures product, it actually had the perfect tag of the 30,000 level. If you look at it in the ETF, it came just a little bit shy, trading here at 299.49. So, these are new lifetime highs, and I feel like it's a very obvious statement, in my opinion, but, to say that new lifetime highs are not bearish. I will see so many traders that come into this and say, like, all right, where can we get short? And I understand that perspective. Obviously the selling from today's high was rather sharp, but I feel like if we're going to continue to play this inside the overall prevailing trend, I think we're just getting started. You'll also notice that I've got a couple of levels noted here on the charts that I think are fascinating, and the one that I'll point out to you here is the COVID gap of 288.75. And where this level comes from is if you'll step back and look at the break that we saw right here, it would have been the week of February 17th. So you can see that's when everything really started hitting the fan. You get this big gap down, and you see this in most products. But in the case of the Dow, we have it right there at 288.75. So when I look at this chart, and it might be best by coming in and looking at the monthly first, but I try to think of my trading and I try to focus on my best opportunities for situations that go with the trend. So if you step back and you look at this monthly chart of the Dow, we made the new lifetime high today, but even inside that, which way would you say this trend is going? The path looks easiest to me from lower left to upper right. And I always enjoy sharing this with traders that may be new to the topic, but you don't have to take my word for these technical signals. Look at this lower histogram where you have the squeeze, which is basically showing us compression and then the resolution of that compression. And look at that move, right? Here is the squeeze signal as it is forming, and then the resolution of that took us from about 180 all the way up into 260. So if you can look at this signal and kind of understand what it did, back here in time, and of course understanding that this took the better part of 18 months to 2 years to play out, well, then you can see the signal that is forming right now. So I'm trying to think of my trading, and there will be intraday opportunities, but really what I'm trying to get prepared for is what I think will be a seasonal rally that has already started and that will then continue into the end of January. So inside that monthly trend, or inside that monthly squeeze, there is the potential for a significant retracement. The way that I try to think about it is to look at the declines that have preceded the rally. Right now, we don't really have a lot to look at on that in the Dow. I think that we need to give this a little bit of room to come back in. And then we'll spend some time on some of these other components. And of course, the primary components inside these indexes that will be the key drivers of this movement. So when we look at the NASDAQ, really the weakest of the primary indexes today, and you can see that it came back down just almost perfectly, filling this gap that you had from that would have been back there on the 4th. So just coming right back down in and filling that gap. We'll see how it trades tomorrow, but this is one of those spots that I would come down and start spending time on smaller time frame charts, looking to see if the decline that we're going through now bears any resemblance to declines we've gone through previously. You can see here that the NASDAQ had this swing high against this swing low, and I would then project that from this high to see if we could have an area that would start creating support. Now, I don't think that we need to rush out here and get terribly excited about buying tomorrow, but I do want to try to offer perspective in the scope of some 3-day charts. So let's look at a couple of these. Good afternoon, David. I think that cash is one of the most intelligent investments you can make right now. We'll cover all of these, but do remember that your very best trading is going to come from points where you have an edge, where you know your market, you know your setup, and you can really thrive in it. You don't need to be involved in every single thing that happens to be successful, and I think that is kind of a general misconception. But anyway, with that being said, and trying to bring some perspective to this market, I just feel like I am going to continue to focus on maintaining a bullish portfolio and doing that in a way that will benefit me over the course of the next 3 months. I keep coming up with this 3 number because I want to show you some charts that I think are going to be very helpful, but we're looking at some 3 days. So this type of a chart, if you're not familiar with it, it's a very basic way of viewing price action. So for every day that Apple trades, we get 1 bar of action. If you flip back over to a weekly chart, these are your 2 primary time frames that a lot of swing traders will look at. The thing that I find interesting right now is that you have so many products that are inside 3-day squeezes. So the squeeze is, and pretty much will always be, the foundation of my trading because of the directional moves that it can provide. So if you come back and you're looking at this 3-day chart, you can see the idea that this compression or this signal here in the lower histogram is showing us this sideways trade. It's showing us that Apple has been in a range from about 103 to 120 for the past several months. That compression builds into the squeeze, and Apple will not always be a $116 product. You have to think out, about the next 3 months is still my window. In that 3 months, do I see Apple coming back here and filling the gap? Or do I see this squeeze beginning to shift momentum and then head higher? The way that I will try to keep myself out of too much heat as I pursue this to the long side is that as long as it continues to close above the 21 EMA, this is the most basic foundational way of viewing the squeeze. The squeeze is built in to Thinkorswim, so if you open a brokerage account there, it is kind of nice to be able to have those indicators built in for free. But our primary objective with the squeeze is to build into a position, meaning buying it at the 21 EMA while the squeeze is coiled. Then ideally you are in that position when the market really starts to move, and if we can see these previous lows hold, that's when the extensions up into new highs start to become kind of interesting. If you're a student of Fibonacci, you can see where Apple failed at the 618 retracement of 124.66. If it can get up through that, that's when we start opening the door to 147, 150, and then 160 above that. So the 3-day squeeze, they're again kind of the perfect medium between looking at a daily versus looking at a weekly, and there are a lot of signals that show this setup. So Apple's one that I think we've got to keep an eye on for the tone of the broad market. Then you also have Tesla, that I've seen this come on and off a couple of times from the IBD swing trader list, and I think that may be a little bit of the volatility that you're seeing here. A lot of times when those names are added to various stock lists, they can really start going bid as everybody sees the report come out and kind of jumps on it at that time. I think that also attributes to the strength that you saw in Tesla earlier today. Of course, as it backs up, you think, okay, which way is this really trying to go? Look at this 3-day chart, step back on it, and the way that I view the markets, which will not always just print money, it does not always work, but the way that I simplify things for myself is to look at this pattern and say, which way is that going? I think most would look at this and tell you that is going from lower left to upper right. It is a bullish trend, and that's going to be the way that I continue to focus on trading it. Now, the areas that it should hold, if it's going to make things easy for us, the 8 is your momentum. So, moving averages are a great way to follow the trend, and I like looking at the 8 for momentum, and then the 21 to see if the trend is still good. You can see how back in here, Tesla dips into the 21 and recovers from that level. Very similar price action off of this bar. So these are the primary lists, and I'm going to go through about another 6 of them that have very similar setups here off of the 3-day charts. And I think if you do see things kind of picking up and moving higher, these are the names that are going to need to lead it. So far we've covered Apple and Tesla. Let's do Amazon next. So Amazon just finished reporting their best quarter ever. Then you had Bezos that sold, I don't remember exactly, I wanted to say it was like 3, actually don't let me misquote it, but I know that Jeff had come in and sold some of his shares, and that gave you some of the I think was the bearish move that you saw kind of towards the end of last week. If you step back and look at this 3-day chart, I'm just trying to show you the exact same thing. You can go back in time and view these other signals. This one is a little bit sloppy. It spent a lot of time congested around those moving averages, but then when it does finally move, the move was to the upside. You can see a little bit cleaner signal off of this. And what I am trying to do, all of this, when you do something like the state of the market and you try to address a crowd that, may not get to listen to your opinion every day, you try to set some type of framework that says, I'm looking for this to play to the long side. Obviously, if Amazon starts seeing daily closes below 28.71, that's not going to be nearly as attractive. I feel like you have to give yourself these wide margins because Amazon is a very large stock. You can't come in and buy it right here and use a $10 stop. You'll be stopped out just off of basic noise. But what I am trying to work with is that the idea of these squeezes are eventually going to fire to the upside, and you're going to see some very healthy upside targets for Amazon. So you can see where I'm trying to label these off of the left shoulder, the head, and then the idea that those lows that we saw last week help create the right side of the inverse head and shoulders. And then if that is something that we can see start to get moving, well, then you're going to have some very serious extensions to the upside. So I've been waiting on really doing a lot with Amazon as far as the aggressive directional trade. But, kind of like was said at the beginning of this where, hey, I've been in cash lately and I'm kind of waiting to get in. That's smart. And then when this stuff starts to get going, this is where I think you're going to find your best opportunities. So these are some of your mega cap, that I think you've got to focus on for the overall market movement. I also wanted to show you a couple others that are a little bit more off the beaten path. You've got Viva Systems, just VEEV. And I will tell you that this has been a difficult product to trade. I've been involved with it a couple different times. But the squeeze is probably going to eventually resolve to the upside. Now, anytime we're looking at this and you're thinking, all right, this is the signal that is currently in play. What might it, what type of movement can this provide? Let's look at the one that occurred previously. So you can see the 3-day squeeze here. And I really enjoy showing this, and trying to explain it in a couple of ways because it would be very easy for me to look at this and say, look where the squeeze fired long and look at this amazing move higher. That's your 40,000 foot view. The reality of it is that if you're in here and you're actually trading this, you need to be prepared to stomach moves like this. These are the types of moves that will flush everyone out. Everyone that's using stops will be stopped out, and then it can resume on the path of, least resistance. So I am watching these for opportunities to come in and buy them. Like the NASDAQ, we just need to see if it needs to ease a little bit lower before we start committing any cash to it. And then, Zahir, thank you for the feedback. Good to be here. I hope you find the analysis helpful. As I go through a few more names that I'm going to be considering, those that I brought to you first I think are the most interesting. Some of these, like work, I wanted to show you just because of the power of Fibonacci. And if you'll spend the time to learn it, I believe you truly will find that it will bring an edge to your trading. So to be brief about this and kind of show you the part of why I'm really studying work here, let me begin by saying that I do not enjoy trying to buy when price is below that 8.21. Everything that we've viewed so far was pulling back into those moving averages and generally the area you'd try to buy it. In this case, with price below the moving averages, generally you're going to interpret those as resistance in a spot that it could be sold from. But to show you why this is such a fascinating chart to me, we have to begin back in here after it sold off of that last earnings report, because look at the precision where if you take this swing high against this swing low, look at where you fail right at the 1618 extension. So it behaves very technically, and if the technical work that I enjoy applying is being respected, then I'm going to continue to try to focus on that name more. All right, we came in and we perfectly held that extension, and now we're working the major retracement. All of this can be, really, and I learned the majority of it through Carolyn's book, which you can find on Amazon, Fibonacci Trading by Carolyn Broden, and it's kind of the foundation for now we look at it and say, if this work continues to be important in this way of analyzing the trend, the low from 15 and a dime, and then run into this high, gives you your 618 retracement right here. So, these levels were here after work reported that last kind of, the earnings report wasn't interpreted very well and it fell on that. But look at where it found support. It found support right at the 618 retracement, and now we're coming down to test this level again. So you got to have a few things kind of on the back burner that you're not necessarily wanting to pile into, but maybe still strike us as a little bit cheap. And I think that as long as this can continue to hold those lows around 25, I think that work might be something worth buying in the next several sessions. Another that I would have you focus on this name from a very speculative point of view. Obviously everything that we're doing is speculative, but just to be clear about this gene therapy is kind of it's a fascinating field to be sure, but what I like showing you in this one, and I always interpret these charts, I like to think more of like an artist as opposed to a scientist, because a scientist might look at these and say, well, you kind of wicked below that area. See how you had some trade down below in this 3-day squeeze? But I look at it and say, the decline that we've gone through here, this high down into this low, is very similar to the correction you saw here to here. So we know that a bullish pattern is constructed of a pattern of higher highs and higher lows. That is one of the best things that symmetry helps you see in your charts. That, here is a high and here is a low. Well, then we have a higher high and a higher low. This move is the same thing, higher high and higher low, and the movement is very similar to how it is corrected before. So the way that I would do this, I think it opens the door mostly to stock traders. You could trade options on it too if you really wanted, but I like these slightly lower priced companies that make it a little bit easier to accumulate your position over time. If you have not pursued the idea of building into a position over time, I think this would be a great place to do it. Here again, speaking to people that I may not get to see again for, a couple of weeks, depending on when this session comes in next. It's like, all right, buy PGNY. Got that? You pile into it tomorrow, and then it's down another 3 or 4 or 5% in the coming sessions. That's not where you want to bail. The way that you want to do this is start your position by saying, if I would like to build into 100 shares of stock, well, tomorrow when the cash markets open, have an order in place to buy 10 shares at the 21 EMA. Use that moving average to calculate your actual entry price. So right now we can see that moving average is trading for $26.94. All right, you want to buy 10 shares at that level, or 100 or 1,000, whatever is appropriate. How big a boy are you? The market can take just about any risk that you can throw at it. But I think if people will start smaller and work these ideas over the next 3 months, I think you'll find that this could be a good performer. So thinking about that daily, buying moves back down into the 21 and slowly building into the position, and then ultimately looking for it to take out its lifetime high. I'll say again, as a relatively new IPO, this can be a little bit speculative, but I love looking for these situations where the old high becomes a self-fulfilling prophecy. Usually you have a magnetic pull up into these areas and treat it that same way, right? As long as we're staying above the 21 EMA on the time frame that you are focused on trading, I think you continue to focus on the buy side of those, and I think that could get interesting into the end of the year. One other that's kind of in the same realm, NVTA. I haven't seen anything really fresh off this one. I am focused on trying to buy it. Let's do just a couple more here. I want to leave you with a few more favorite picks, and then I'll see if there's any questions I may be able to answer. But you've got products like Nike, where I would have you look at this in exactly the same way. And think about studying this. If you had any volatile moves over the course of the past couple of weeks, think about analyzing them in scope of what the previous declines have done. Right here, this flush may feel so drastic in Nike, but if you think about this correction in dollar value terms, then you'll come back and say, well, this correction was almost exactly the same thing. The level that I give is 120.13, and you can see that it did wick below it by a bit, but ultimately the pattern of higher highs and higher lows is still intact, and I think that Nike is still a good stock for a print. I'm going to try to play it up into 138 and then 150 after that. So big pop today, gave all of it back, doesn't damage the trend whatsoever. Treat this one the same way. which says that if you want to start pursuing this idea, try to buy a little bit of it at the 21 EMA tomorrow. Maybe you wait till Wednesday. You try to do this also within the scope of the indexes, but ultimately I think that that's going to continue to be a very good pick, and I am looking for higher prices in Nike. I also wanted to look at this with you, and sometimes when I do these sessions, I feel like they end up being catered very much towards stock traders because that's a little bit, more open, and I think more people trade stock than options. But if you are an options trader, give some time to think about the butterflies in Facebook at 300. So kind of running the same way of thinking here, where we're going to look at our bigger time frames, and you can see I've got a couple psychological areas marked off. The one I'm focused on now is 300. But what we're trying to do is think about 2 Fridays that are remaining in this year, the first of which is going to be the expiration that comes up here in November. So today being the 9th, the expiration of the 20th will be your standard monthly expiration. And I'm looking at the idea that Facebook might be trying to get up into 300. Now, there are a couple different ways to configure these types of spreads, and I'm going to show you the one I have on now. And then we can look at a few more of these. This one's kind of been a fun one to look at because I had to take heat on it for several days. But now, that Facebook is coming in, I'm starting to make some money on it. The whole trick in this is continuing to place your body around the $300 call and then just deciding how you would like to structure the width. In this case, instead of doing it as a balanced butterfly, you'll notice that I'm $10 wide on the call debit side and then $25 wide on the call credit side. Think of your butterflies in that way as basically 2 verticals. One part's going to be the call debit or put debit, and then the other part of that vertical will be the credit side. In this, you can see how by doing the, having it wider on my credit side and being in this for a couple of days when Facebook was pushing up into here, that generates a lot of heat. But then you start to get the slightest of pullbacks, and then suddenly your spread looks very cooperative. To show you how to do this going forward, I still think that the Decembers would be a good place to focus. You also notice, and I always try to think about this, are my ideas too far-fetched? Or are the market makers kind of thinking the same thing? If you look here in the 11-day, which is that, next Friday's expiration, over the course of 11 days, market makers are pricing in a $17 move. This is why I break that wing, because let's just use round numbers here for very easy math and say we're trading 280. Market makers think we could move $20, but that $20 rally should mark the upper end of the range, right? It shouldn't get too much further past 300. Not only do you have the expected range, but then you also have that big psychological barrier. So if you're thinking, well, maybe it gets up into 300, but I also feel like it's kind of a long shot, that's where you break the wing on the risk side. So let's say instead of doing 295, 300, and then 305, the basic 5 wide fly, we'll move that 05 up into 10. See, by doing this, the transaction now goes for a 10-cent credit. And if you're new to doing them this way, it may seem like, gosh, a 10-cent credit, why would I waste my time? Understand that the maximum profit is not derived from the 10-cent credit. Like if you're doing an iron condor or something, the structure of this trade makes it very unique that your maximum profit would actually be $510, right? If you pin at 300, and this is why I'm discussing these around these monthly expirations, because you can see these types of mega cap stocks move towards psychological, consolidation price points. So, these are the trades that I would have you be looking at. I really think that you start legging into a little bit more of this Facebook in the days ahead, but I think a rally on that into the end of the year would be an excellent place to be looking for a little bit of exposure. Let's do one other that I was noting as having a little bit of symmetry in here, which is Chewy. So in Chewy, we have the same kind of situation where I don't know that, tomorrow is the day to go piling into this. But as I assess Chewy on the weekly charts, I always like stepping back and just, looking at it from pure pattern and which way is that going? Well, to me, it sure looks like it's going up. All right, we take that idea and then we move it down here into the daily charts where we're noting that if the decline happening now, notice this swing high down into this swing low, something like, let's call it 59. If you're able to get down, it's another way of saying maybe I can buy Chewy below 60. Let it get below 60 and then it's on sale, because that corrective move would be no different from this corrective move. And after that correction happened, you had a very nice uptrend. So I think names like that are worth keeping on your radar. And also remember that Chewy has high short interest. So there is a large number of traders that have shorted this, looking for prices to move lower. If they can start getting squeezed, that will add fuel to the bullish move and can end up being something that's really worthwhile to the long side. Another name that has a very similar potential is Restoration Hardware. Now you can see that this fire line, this technical area of resistance, has been a wall, and you could combine that too with the psychological value of 400. So Restoration Hardware has had a little bit of trouble getting through that, but when I think about existing home sales and I think about things of that nature, I think that you're going to see names like Restoration Hardware continue to do well, and that if you can start seeing shorts get squeezed, this could have a more significant move. The action of the past several months, in my opinion, all stems from the earnings beat. Do you see how you have this monstrous move from about 320 up into 410? That's a huge move off of earnings. This is all consolidating that move. Granted, it has had an extremely wide range, but generally, when you have such a good beat off of earnings, if you're looking for that trend to continue, then this consolidation is beneficial. And the longer that it builds this as a bit of a base or a bit of an area where prices are accepted, the more meaningful the trend can be that gets up out of it. That's just another way of saying, all right, trade sideways for as long as you need to, because then when it finally gets going, look at it back here. That same red line is based off of that same voodoo line study set. Do you see how it consolidated here for about a month and a half? But then when it gets going, that was an excellent trend. So I just feel like we're repeating more of that. Trading sideways through this, mostly consolidation, but keep an eye on Restoration Hardware for the potential of bigger moves into the end of January. And then how do you trade options? Well, there is an infinite number of ways to trade options. And if you listen to a lot of different mentors, you'll probably come up with a lot of different ways of doing it. I think that if I was to give advice to somebody just getting started, try to think about the importance of being theta positive. The only thing that we're generally guaranteed in trading is that time is going to move forward. We all pretty much agree on the assumption that tomorrow is going to come. So as long as tomorrow keeps getting here, think about using strategies that will leave you in a positive theta state. Then you can start thinking a little bit more about direction and the types of the exact types of strategies you want to use, but that would be my first piece of basic advice. Hey, thank you for the feedback, Sabrina. I truly appreciate it, and I am thankful that you guys tuned in today. I try to make the most that I can out of these sessions. It will be very fascinating to see where the market is at over the course of the next, 2 and 3 months. If you had to pick one to really focus on, I would have you focus on the December expiration. Remember that you only have 4 witching expirations in a year. So to think that it only happens 4 times a year, that's a relatively rare occurrence. That is when you have a whole list of different products, single stock futures, futures contracts, options, all of these converge, and they're all expiring at one point. The unwinding of those derivatives can create kind of manipulated type action. So, if the pin doesn't come through perfectly for you in November, really pay attention to it in December, and I think it could give you a good trade. To that person that's like asking, how would you perform surgery? I use the other analogy too of how long is a rope? I don't know. There's lots of variables in that and lots of purposes that you could be pursuing with it. But let's just do a couple more here. If you guys have any symbols you'd like to review, I'll be happy to throw them in real quick. Walmart is another that has been in a daily squeeze, and it's just a stone's throw from this lifetime high. One of the scans that I enjoy running the most are products that are in a daily squeeze and within 10% of a 52-week high. Now, you have to give me very broad strokes with this, or you have to give big picture analysis, because to have Walmart come all the way back, and I'm going to show you the low that I'm going to use here. To have Walmart come all the way back to 134.75, that may be a lot more risk than a lot of people are willing to take, and I get that. But the way that we use Fibonacci, as long as that low does remain intact, then these are the targets you're going to look for. The idea is that I'll be wrong on this if Walmart gets a daily close below this level. Okay, that's that 40,000 foot view. Trade a little smaller, give yourself more room to not be shaken out. But as long as that is good, then you start focusing on this as your first target. That way, when it's making this new high, you're not the person sitting there asking, oh, can I buy Walmart now that it's made this new high? You are taking profits on a bit of the position when you make this high, and then you're trailing it up into the overhead extensions. And I think that'll be a good play as long as we stay above 134.75. Check out Zoom Shop. So Shop, you talk about 3-day squeezes. This is another product that has a huge 3-day squeeze. The lack of liquidity in Shopify is a problem for a lot of traders, which is to say that it's not, especially friendly. I would look at this from the point of view of the decline that preceded the rally and just see if it's close. Do you see? And I think it's exceeded it, but what I'm trying to measure is this decline have any relationship to this decline? Because after this one was over, we went from 300, to 1,000. So you're trying to think if that's going to be some type of a trend continuation move. In measuring that correction and comparing it, I like leaving this to your decision. This is where I'm telling you, the scientist is going to look at it and say, it traded a little bit below it. But the artist will say, this correction is just repetition inside a pattern of higher highs and higher lows. I will only buy Shopify. I guess that's another thing to be very clear about, is that if it keeps falling, okay, try to stand back. And I don't want you to take more heat than you're comfortable with. But when I look at this trend, which way is it generally going? Most of the time, we are seeing progress in the bullish direction, and I just want to buy Shopify. The last thing that I'll say about it is you may see some psychological resistance at the $1,000 price point. Right? This is a very rough estimate. I'm drawing it kind of through there, but you can imagine that would be about where you see the $1,000 price point. You get below it, you get below it, you get above it. You see, that's just back and forth through that. So may be tough to get through 1,000, but when it does, it should have legs. I think it's something somewhat similar to jump over to gold. Gold is having trouble getting through 2,000. It traded as high as 2089, but this is a product that needs another good flush. I'd like to try and buy some of it around 1750, but we shall see. A few others, and I'll try to get to these requests since you guys were nice enough to send them my way. I'll see if there's anything interesting on it. I can't go through everything, but I'll see if some of them stand out. CELH. Now there's a chart pattern. Anytime I look at something new, we've been spending some time on these 3-day squeezes in this session, and you can see off of this 3-day chart, that looks like a beautiful pattern. Just to make sure I'm not missing anything in a name that I haven't reviewed, I'll go back and look at the monthly, and I just want to look at everything there is to know about the price pattern of this stock. Clearly, they are doing something right. So I am very much of the mindset, I would never look at this and tell you to short it, right? I'm not a contrarian. I'm not trying to call the top. I'm looking at this and saying that is obviously going higher, so I should play it in that bullish direction. It's also a spot to think about. An asset that has outperformed over the past 6 months should continue to outperform over the next 6 months. But you have to give yourself 6 months. So much of us get in kind of I think sometimes a tense spot over just a day of trading. But, I would look at that with a very big picture view as an excellent pattern. I think you should buy it down into 20. And that might make a list that I'll do for myself. A lot of these may not have a pattern, and I'll just kind of keep going through them. But that looks pretty solid, and that may be worth considering in the coming sessions. Activision has been a little sloppy. I like the weekly chart. Think about so many of these names that have breached or that have made a new high, right? So if we look back at this, the 2018 highs are what I was referencing in Activision. This is more big picture work, which I think I've traded Activision enough to know that it can be kind of sloppy. But when we make this new lifetime high, right? 87.73 was the new lifetime high, getting above the old 2018 highs. This creates a massive upside extension. I'll kind of bring this to a close with these couple of comments and this, way of thinking, that if you didn't have this big correction, like say for example, Activision just had a little something like this, well then your extension would be very modest. The target would be kind of small. Instead, since you've had this very deep downside correction, look how big that makes your targets. So in time, Activision's going to be $100 stock. Outside of that, of course, timing is everything. But I like Activision for higher prices, and I think the chart that I'll leave you with, we already spoke about it briefly through the diamonds, but if you look at it here in the Dow futures, look at that perfect print. And you can't tell me that psychological values don't have bearing in the market. Look at how you failed exactly at 30,000. But the point that I wanted to leave you with, and what I think is going to be so fascinating as we get into the first part of 2021, is that the COVID correction, the selling that you saw all through here in pretty much every product, has made for amazing targets. So the new lifetime high is not bearish. We could pull back anywhere inside here, and I'm still going to have these big extensions in mind. So I hope that was helpful. I hope that for the questions I was able to get to, you found those insightful and helpful in your trading. If you're interested in this, I am in the chat room 4 days a week. I have the cash open, and this is where we spend a lot of our time going through these setups, taking other traders' requests, and trying to figure out where we're going next. So thanks again for spending a little bit of your afternoon with me. I hope it was enjoyable. I hope to see you in the chat room tomorrow morning and in the next State of the Market. Y'all have a good night, and I will talk to you then.